Look, anyone can make a mistake and say something stupid on social media. And yes, even the most financially powerful people don't understand how banking works, and they can be forgiven for that. What I want to dig into is this idea that, quote, everyone wants a checking account, not to loan the bank money. This is where I want to dig in. It's actually an interesting concept, and it's something that's going on that a lot of people aren't really aware of. Um, this comment about when I deposit money into the bank, I don't want the bank to actually do anything with it. That sounds a whole lot like the crypto and decentralized financed rallying cry of not your keys, not your crypto, or not your coins, or not your currency. Um, so here's the way you interact with an economy. At the very most fundamental terms, there are only two ways. One is you use a financial institution, a custodian that holds your money and allows you to transact. There's a lot of really good reasons to do that. The other is to hold the currency yourself. Holding the currency yourself is like having it in your wallet. It can get stolen. You could forget where it is. Your house could burn down, and the money in your that's hidden in your mattress could burn with it. That's self custody right there, the last scenario. But interacting with a custodian has a lot of advantages. Here in the United States, the FDIC insures deposits up to $250,000. Anyone following the Silicon Valley Bank um, drama right now is probably highly aware of that fact, or being reminded of that fact. So there's a lot of safety there. The other thing about financial institutions and custodians is they've spent 80 years or more developing really sophisticated ways to work with your money. And so, like, I can go overseas, I can charge in a credit card, there's no transaction fees, and my money is transferring to the stall vendor in Munich so I can buy my pretzel. That's fantastic that I can do that without actually carrying the cash with me all the way to Munich. Um, so there's positives there. Now, the quid pro quo is that for every $100 I have in a bank account, $90 of that is typically lent out to others who frankly need it. This is a really integral part of our economy, and I'm going to get back to that later. But when you have a deposit at the bank, it's actually leveraged so out into the economy, and that money isn't just sitting in a wallet for me to take out at any time. For example, if there's a bank run, very different from the world of decentralized finance and self-custodied wallets. So, just because the underlying radically different technology that is employed uh, in blockchain and crypto, we can have both advantages. We can self-custody our capital, and we can enjoy digital services that are really advanced, and I would argue can become far more advanced than what we know in banking today. So that's exciting, and we'll continue on a little bit more about that later. But just like Mr. Sachs wants to do in crypto, you can become your own bank. That means no one can lend against your money. Only you can lend against your money. And that allows you alone to reap the rewards of taking those risks. That is why there are so many crypto maxis out there that believe that DeFi is really the end solution. That is the answer to all of our ills. I'm not fully on board with that. I like it as a North Star, but it's going to take a massive amount of work uh, and social evolution to get to that place. There's a giant caveat here. One is that because you're carrying everything around in your wallet, you can lose it at any time. You can lose your entire net worth at any time. That's a problem that has to be solved. The second thing is the banks are incredibly efficient at multiplying the capital that we own into circulation. So if I have a deposit in the bank of $100 and they're lending $90 out to institutions or people that need it, these would be for auto loans, they'd be for personal loans, they'd be for that ever useful accounts receivable line of credit that companies often need, mortgages. All these things are offered by banks at quite low rates because of this fabulous financial system that we've created over the last 80 plus years. Now, if everyone were to suddenly pull their capital out of custodied accounts, the bank's abilities to lend that capital out into the economy would vaporize. If you can do the math, you can see that our economy would tank as a result. So naturally, this isn't going to happen overnight, if it happens at all. We obviously have a lot of work to do in traditional financial services. We have a lot of work to do in decentralized finance. Most importantly, we have a lot of work to do with the regulatory frameworks that govern all of this. And right now, the wind is very much against the advances in our financial system that we can reap through decentralized finance, through blockchain, through crypto. And that's something that we need to step up for. And I encourage everyone to learn what a bank is, how a bank works, how our economy is dependent on custodians, and also how decentralized finance can advance some of the problems, can solve some of the problems that we see, albeit with its own host of issues. So I'm here to help. Please reach out to me at any time, DM me, and let me know if you have any questions, because this is a very important topic to me, and I want to advance the cause of financial services worldwide. Until next time, keep up the hard work and take care.